you will not be profitable. So you need to pay close attention and watch the video right till the end. In this full course, I'm going to be divulging a fully fledged strategy that you can use from A to Z to be profitable in the markets. Okay, you need to be able to put the rules into practice and use them exactly as I explain them. So make sure that you watch the entire video from start to finish. Otherwise, you're going to really struggle to implement this in a profitable way. However, guys, I give you step-by-step instructions to follow. If you miss out on any of these instructions or any of these steps, you will not be profitable. So you need to pay close attention and watch the video right till the end. This strategy has an extremely high win rate, and if you follow all of the rules, you will be able to maintain that high win rate as well as get a very good risk reward. This means that you will be profitable if you follow all of my instructions. This strategy works on Euro USD, it works on gold, and it works on indices as well, like NASDAQ and US 30. It is a highly profitable strategy, and it works with ICT concepts, smart money concepts, as well as liquidity. It works with order blocks. It works with fair value gaps as well. We are looking at structure in the market, and that is why you can't go wrong. Structure is always king. So without further ado, guys, let's hop straight into this strategy video and mini course. So this strategy is the 2-box strategy. Okay, that's because we are mainly working on 2 time frames as usual, using a higher time frame and a lower time frame. So we will be using the 1 hour and the 5 minute for entries. Okay, so the 1 hour is basically to find structure, and the 5 minute is for entries. Okay, so basically what we would be looking to do is we would find the 1 hour candle on the 1 hour time frame. Obviously we would then look, obviously this is the 1 hour candle, for example. We will then mark out the highest point and the lowest point. We will then drop down to a lower time frame, okay, which is the 5 minutes, and we will then look for a break of either price breaking to the upside or price breaking to the downside. Okay, now you have to remember that the logic behind this strategy is quite simple. On the lower time frames, this is a range. Okay, this is a range on the lower time frame, and retail traders are looking to enter on the break of the highs. So these would be the highs, and they will have their entry sitting at this level, and they will be looking to go long once price breaks. However, what most likely is going to happen, price is going to look like it's breaking, close above, okay, and then break right back in, and then trade off of a demand zone, or if it's a sell, a supply zone, and then go higher in the direction. So it takes out the liquidity of the buy side liquidity. Okay, so this is buy side liquidity. Again, all of this is all liquidity concepts, so you have to know where liquidity is in order to know where the market is going, and this is sell side. Okay, so basically price is taking out buy side liquidity and then coming down to fill an imbalance and then tap into an order block and go. And for sells, you're looking for sell side liquidity to be taken on this 1 hour order block, come back, tap into a higher time frame, or not higher time frame, lower time frame order block on the 5 minute where there is an imbalance. Okay, there has to be an imbalance before this order block, and then it will go. Okay, you'll see exactly what I mean very shortly, but basically you are looking for price to break this 1 hour candle high. Okay, so that's number one that we're looking for. Break of 1 hour high or low, and that's number one. You're then looking for, and it must be a body break, okay? It cannot be just a wick that just pings above like that. Say that's your candle. No, it has to be a full body candle, if that makes sense. That looks terrible. It'll look like a body that's fully closed above. So that's the first bit of criteria that we're looking for. So once price has broken out, we are then looking for the order block that created the breakout, okay? And so the order block will literally always have, let me show you what it will look like. It will look like so. There will be a break of structure as with most order blocks, okay? So you look for the origin of this break of structure, okay? Or once price breaks here, we're then going to be looking for an order block here. So it's going to be one of these two. It's going to be either here where price originally broke structure, or there's going to be an order block here, okay? Now the way we decide between this first one here, okay, so this order block here and this order block here, is because there must also be an imbalance, okay, or a fair value gap, okay? So the fair value gap is what really makes the strategy very good, because it allows you to differentiate between a order block that is going to hold and an order block that is not going to hold. So if, for example, there is no imbalance at this order block, and again, if you're struggling with imbalances, I have a video as well on fair value gaps and imbalances. That is in my video list. You will find it there, and I explain it in detail. You'll also see in the examples what they look like. But basically, say for instance there is no imbalance above this particular order block, we will then be waiting for price to come back down and tap into this order block, and then we target these highs, okay, that were created with the break of this 1 hour level. So it's that simple. Okay, we would enter off the imbalance, not off the imbalance, off the order block that has imbalance resting above, and you will see that. And in some cases there will be imbalance on both, okay, and in that case we will, for example, if it breaks straight through this imbalance here, okay, and takes us out for a loss, we will take this second trade as well. And that statistically I have tested, and it works really well. So again, guys, I suggest you do your own backtesting as well. Go through many months of data, collect the data in your spreadsheet. I've included that in my backtesting video, which you can also see in my video list. And yeah, create the data and see for yourself what works and what doesn't work, but also figure out what works with your personality. Some people will take partials, other people will wait firstly for price to come and break new highs, etc., etc. So now I'm going to show you guys basically a example of all of these trades. So let's remove everything. Let's go back in price. Okay, so let's have a look here. So we're on the 1 hour currently. Okay, so like I say, the first step is to mark out the 1 hour highs and the 1 hour low. Okay, so now what we're going to do is go down to the 5 minute and wait for these to be broken. Let me just go back. That's not quite on. Cool. Now we're waiting for these areas to be broken on the 5 minute time frame. Okay, so let's see what happens here. Often what you'll see as well, guys, is that price will come down, okay, just miss, or take out liquidity here. So it will wick past here and then close back inside, okay, and that will then come and break structure here, and you can enter off of here, but you'll see what I mean now. Okay, so we're waiting for a body break above one of these two levels. Obviously, if we look back, we can see as well the price is creating higher highs, higher lows. Okay, so at the moment actually there's a double top, and a lot of people will have gone short here, so we're again waiting for this to be broken. But you can see that history is showing us higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and now we're waiting for the higher high, higher low to continue. So let us see what happens. Okay, so that is a break above. This just broke above. Now we're looking for the imbalance. Okay, so the imbalance is the gap between three candles. You can have a look at my video that I will link in the description. You'll be able to see exactly how to figure out what a fair value gap is. This is a fair value gap here, and we've got a lower one here. Now what I will be, there's also one up here as well. So what I'm going to most likely be looking at is this order block here, okay, which is the first available one. There is a significant imbalance created that price will need to fill. If that breaks, then we will go for this imbalance here. Okay, so let's see what price decides to do. And my entry is normally on the EQ. Okay, so I use this GAN box tool. Okay, if you want to see the settings that I have here to allow you to see the 50%, these are the settings here. Okay, so the 0.5, the 1 and the 0 are selected. You can choose whatever colors you want and make it however dark you want it to be. So this gives me the 50% of this order block. Okay, and it allows me to place the entry at halfway, like so. So we place the entry at halfway. We'll give it an extra 0.5 for the spread, so like so. And I like to try and target at least 0.5. okay, I mean 5 risk reward. Okay, so let's see if we get tagged in here. Get tagged in. Let's see if we hit our TP, and yes. Okay, so we hit TP on that trade. Again, if price came lower, I would be prepared to have taken this as well. Okay, because why? There is a fair value gap here, and then we've got the order block below. So it's a high probability setup. Not just that, we've got higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Okay, so let's go again onto the 1 hour and look for the next setup. So here is the most recent 1 hour. Let's move it. Okay, go on to the 5 minute. Let's wait for price to break. Okay, so here we've got price breaking to the downside. Now, in an uptrend like this, if you see price going like this, okay, I would not recommend going for a sell. If you get a setup like this, you need to have a significant, you need to have a significant break to the downside. Okay, if you do, you need to target much lower targets. Okay, in this case, right, we did break, but this is a fair value gap right here that we're tapping into. Okay, a very strong one, and in this case, I would not go for this. Okay, we go back onto the 1 hour. Okay, and we can see that we're in a range again. So I'm not looking to potentially enter this. I will, let's say, just for interest's sake, let us enter. Okay, just for the sake of fun. But as you can see as well, if we enter, we don't have a very good risk reward. Okay, so let's enter just to observe the rules. Okay, so we would have the order block, which will be this here. Okay, make it blue, and the fair value gap I've marked out here. Okay, we can actually extend it because there's two fair value gaps here. So we can enter like so, give it 0.5, and I would probably go break even at this point right here, and we can target these lows. Okay, again, I'm not going for as far of a target because like I said, everything is looking long because we're making higher highs, higher lows, higher highs, higher lows. So I will take it, however, just to be on the side of being mechanical. Okay, so let's allow this to play out. If price breaks to the upside and breaks these highs, I will then be looking for long positions. Okay, so price has broken to the upside, so we would have taken a loss here. Okay, I'll mark that by an X. In fact, I will use the emojis. I like to use this emoji for a loss. Okay, and then obviously here we've got a win, which is a smiley face. Okay, so we've broken impulsively, and you can see it's a really nice candle that breaks. We've got the value gap here. Okay, and then we've got the order block right here. Okay, this right here is the order block. Let's get rid of this stuff. Okay, and so I will enter at the 50% of this area. Okay, so 50% of this area, whoops, stops 0.5 below, and we are targeting 5 risk reward. Okay, so not yet tagged in. Let me make this a bit shorter so you can see it a bit easier, as well as this. Okay, so it's sort of gone off without us, so it's really started taking off. This is the 1 hour high now, so it's broken it. Let's see if it comes back into this area. Okay, let's check the 1 hour again. Okay, again it's taken off like so. Onto the 5 minute. See, here is a wick break, and that's not a trade that we can take because you can see it's literally just grabbed liquidity. So that's why we need a body break. You can see that the fair value gap is here, and sorry, the order blocks we mark out in blue, which will be this here, and the fair value gap is just lying above here. Okay, so you can see it keeps tapping into the fair value gap, but there is actually liquidity here. Okay, whoops, there is actually liquidity below these equal lows here. Okay, but we have not had a break, significant break. Okay, so you can see price tapped in and it would have taken us out here. Okay, and that's why we wait for a break to the upside first. So as you can see, that's why we wait for a full body break above, because you can see that it tapped into the imbalance, which is the yellow, came for the order block and completely swept it because there was no change in direction. Okay, so we're waiting for that change in direction to kick in. You can see it just keeps rejecting this area. No clear break. Now we've got a clear break. Okay, very clear break. So now we are looking for the fair value gap. Okay, which we now have here. All right, and so the fair value gap is there, and so directly below, which is in our zone, okay, that's the most important thing, okay. This order block needs to be within our zone, so the order block is within our zone, the fair value gap is outside, but that's okay, okay. And now we're waiting for price to tap in and continue forward. Again, we will enter at the 50% of the zone, okay. So we will enter here with our stop 0.5 pips just below, and we'll be targeting 5 risk reward like so. Let's see. Okay, so we tagged in now and tagged out just like that. Okay, so we've taken a loss on that trade. So now we're going to hop back onto the 1 hour. We're going to mark out the high and the low as well, and then drop down to the 5 minute. Okay, so now we're waiting for price to break the high. You can see it just rejected the low as well. Okay, so it broke. Okay, there is a fair value gap right here. Okay, and the order block would be this area right here. Okay, so we will be entering on that. Okay, the 50% of that zone. So my stop will be just below. Just give it 0.5 for spreads. Again, this is the fair value gap. I'll make it yellow. Okay, we're looking for 5 risk reward. Okay, so we're tagged in now. Tagged in. And we hit our take profit. Okay, so we've had 1 loss, 2 loss, and a win and a win. So our win rate is 50%, but we are taking 1 to 5 risk rewards. So again, we repeat the process once again. We go on to the 1 hour, mark out the high. Again, obviously our bias is long at this point. You can also see if you look above, there's a fair value gap here that price we know is going to most likely want to fill. So with that in mind, we are looking for long biases. Okay, so as we can see here, price has taken out the lows. Okay, there's a fair value gap here, and so this would be our order block we would look to enter short off of. Okay, like I've said previously, we are very bullish, so let's see. Okay, so it looks like price has sort of taken off without us. Okay, let's come back now. So we would enter on the 50% of this order block, and we will give it a 0.5 above and look for 1 to 5 risk reward. Okay, you can see this candle looks pretty aggressive, so let's see if this plays out. Okay, are we tagged in? Not quite yet. Yes, we're tagged in. And there you go, 1 to 5 risk reward ratio. Okay, and that's why you basically just take all of the setups that you get given. Alright, so again, now we're looking for a break of the 1 hour high, which is this level here, and then we will take one final setup. Okay, and you can see that it's rejected that low as well. Okay, so it's broken out. There is no real clear fair value gap except for this, and bearing in mind that this is not in a very discounted area. So let's see if this plays out. This of course is our fair value gap that I'll put in yellow. we're entering off of the 50%. I will also place my stop just below these wicks, so like so. Okay, and again we're targeting 1 to 5 risk reward. Let's see if we get tagged in. We're tagged in, and this final one is a loss. Let's just see if we get one lost. So that's a loss. On the hourly, see if we get one last setup. So we will hop onto the 1 hour and then onto the 5 minute. Okay, so price breaks to the downside. We've got a gap here, and this is the order block directly above. I will place a sell limit at the 50% of this order block and 0.5 spreads. Okay, so it's 0.7, so we'll just make it 1.5. 1.5. Okay, and we're looking for 1 to 5 risk rewards. Okay, we're tagged in and we get smashed out. All right, so it did have a nice reaction. We would have been up 1 to 2 risk reward, so it's possible you could have gone break even, but we will count it as a loss. Okay, so as you can see, guys, we've had 1, 2, 3 wins and 1, 2, 3, 4 losses. So it's 1, 2, 3. So we've got 15 R, okay, or 15% minus 4 losses. So we made a grand total of 11 R or percent, okay, and this period of time is about a day and 9 hours, so not too shabby. So as you guys can see, the win rate is not bad at all. Here it is like 40% and you're making 1 to 5 risk reward. If your risk reward was less, you might have a slightly higher win rate. As you can see, price does react to these zones. Here we can see, even though it lost, there was a reaction. Here as well there was a reaction, so you could potentially go break even at 1 to 1 or 1 to 2, and that may make your win rate higher. This is just the way that I prefer to trade it, and with your own back testing you will be able to maybe make it more profitable just by optimizing it. However, guys, that's the entire point. You need to be able to adapt the strategy to suit your psychology and your lifestyle. So yeah, that is my 2-box strategy. As you guys can see, like literally just blind testing it on this data, you can make pretty good returns and have quite a good win rate with a good risk reward ratio. So I recommend, guys, go back test it, go and refine it. And yeah, I mean, this is literally straight from our course. So if you guys want to learn more about how we trade, the link is in my bio to join our community. So thank you so much to everybody who watched right to the end. You guys have learned something very valuable today, and I will see you guys in the next video. Cheers, everyone.